Here are clear steps to invest the right way. 1. Learn the basics before starting. Understand, what is a stock, the difference between stocks and funds, market indexes like the S&P 500, NASDAQ, and Dow Jones. 2. Set your financial goals. Are you investing for long-term saving, retirement, or extra income? How much risk can you tolerate? What's your investment timeline? Short, medium, or long-term? 3. Open a brokerage account. Choose a trusted platform such as Interactive Brokers, TD Ameritrade, E-Trade, Robinhood, good for beginners, Fidelity or Charles Schwab. 4. Start with index funds/ETFs. This is a safer and popular approach for beginners. Examples: Vanguard S&P 500 ETF, VOO, SPDR S&P 500 ETF, SPY. These funds invest in a large number of stocks, which lowers risk. 5. Diversify your portfolio. Don't put all your money in one stock. Spread across sectors, tech, healthcare, finance, or use diversified funds that do it for you. 6. Invest regularly. Dollar cost averaging. Invest a fixed amount monthly regardless of market performance. This strategy reduces the effect of market volatility. 7. Think long term. Don't try to time the market. Ignore daily fluctuations and focus on your goals. 8. Keep learning. Read books like The Intelligent Investor by Benjamin Graham, Common Stocks and Uncommon Profits by Philip Fisher. Follow educational content and reliable sources. Avoid common mistakes, buying based on unreliable recommendations, emotional trading, selling in fear or buying in hype, jumping into trendy stocks without research. If you'd like help planning a portfolio or want practical examples of stocks or funds, tell me your goal or starting capital and I'll build a simple plan for you. You said, yes, great. Let's start with a simple plan that suits you. I need a few quick answers to guide you properly. How much are you planning to start with? E.g. $500, $5,000. Will you invest monthly? How much? What's your goal? Long-term growth. Monthly income. Buying a house. Do you prefer low-risk investments or can you handle more risk? Do you have previous experience or are you a complete beginner? Once I get your answers, I'll give you a practical investment model with a breakdown of ETFs/stocks you can start with today. You said, low risk. Perfect. Since you're looking for low-risk investing, the goal will be, protect your capital plus steady long-term growth without big swings or high risk. Let's start with a model portfolio. If you answer the questions above in detail, I'll tailor it more closely to your situation. Simple investment plan, low-risk focus, example $4,500, investment type percent approximate, amount suggested ETFs broad US index fund, S&P 500. 40% $2,000 VOO or SPY bonds ETF 30% $1,500 BND or AGG international markets ETF 20% $1,000 VXUS or VEA cash/emergency fund 10% $500 keep in your account. If you're adding money monthly, use the same ratio, 40/30/20/10, and set up auto invest if possible. Why this portfolio is good for low risk. S&P 500 equals stable U.S. companies, bonds equals provide stability and fixed returns, international funds equals geographic diversification, cash equals reserve for emergencies or dips. Tips: don't check your portfolio daily. Review every 3 to 6 months, use a commission-free broker, e.g. Fidelity, Schwab, Robinhood, rebalance once a year if percentages shift. You said, make a custom plan. Perfect. To make a fully personalized and realistic investment plan, I need quick answers. 1. How much will you start with? E.g. $1,000, $5,000, $10,000. 2. Will you invest monthly? How much? 3. When do you expect to need the money? Less than a year, 3 to 5 years, 10 plus years. 4. Do you have any debt? 5. Do you have a steady income? 6. Do you have emergency savings, 3 to 6 months? Or is this your first financial experience? You said, let's say $1,000. Awesome, $1,000 is a solid start since you prefer low risk. Here's a personalized plan, personalized investment plan, $1,000 capital, allocation, asset type percent amount ETF suggestions U.S. Stocks, S&P 500, 40% $400 VOO or SPY bonds, 30% $300 BND or AGG international stocks, 20% $200 VXUS or VEA cash reserve, 10% $100 keep in account. Why this works: VOO/SPY, large cap US companies, steady growth; BND/AGG, stable income, lower volatility; VXUS/VEA, global exposure, adds diversification; $100 cash, quick access for emergency or dips. If you plan monthly investing, for example, $100 per month, $40 VOO, $30 BND, $20 VXUS, $10 cash or extra bonds. How to start: 1. Open a brokerage account, e.g. Robinhood, Fidelity, Schwab. 2. Buy the ETFs listed above in the given ratio. 3. Set up auto investing if available. 4. Don't sell during dips, you're investing long-term. Final tips: check your portfolio every 6 months, try to build a separate emergency fund before increasing your investment. Think of investing like planting a tree, not a lottery ticket.